All right. Welcome back to the Harmonic Trading Club, the Ultimate Trader Workshop, another HTC, in this case, an FX Live. Hopefully, you can see the title. We're going to be talking about gold again. We just talked about gold a couple of days ago, talking about how it was going to deal with that $5,000 threshold. Of course, it broke it, as you can see, like on the chart, exceeded it, smashed it, and I think the high ended up being 56. So, got a little treat for you, a little bit of technical projection on this one. If things react as intended, I guess, act as they should, harmonically, structurally, if those things hold, then we're going to go ahead and put the next projection into go. Now, remember, this video is for entertainment and educational purposes only. Do not go run to your broker, start buying a bunch of gold, saying the Harmonic Trading Club or Trade said to gold was going to do this or gold is going to do that. I'm just going to make a simple technical projection. Trade and manage your money at your own risk. Consult with a financial advisor of your choice when it comes to dealing with these financial markets. All the housekeeping being done. I kind of started doing some of the work for you already. It's going to be a very short video. It's going to be an easy one, actually. But I said it is predicated off of the market reacting as it should structurally, harmonically, and technically. So I'm just going to start all over to show you guys where I'm getting this idea from. And like I said, this is going to be a short video because this one is kind of easy for me, the way that I look at the market. So all we're doing right here, okay, to come up with what we're going to talk about for this video is looking at where the market consolidated at, okay? You can see that right there. This is back, of course, January 11th of 26. It's a period here, January 11th to January 16th. So 5-6 days of consolidation before this turned out to be a phase of accumulation. That's why you see the breakout. You see the decision that was made, the institutional decision was made that was going to allow that breakout to happen. Okay, so now you can see the reason. Remember, I always tell you guys the chart will tell you the story. So now you understand what happened before that period of accumulation. The institutions got behind gold, maybe some fundamentals to back it up as well, and off to the races it went. So that being said, I'm going to use that as a starting point. Okay, I'm going to use that as a starting point to talk about it. Swing low to swing high and see what happened, and then we'll tie the rest of it together. So of course, since the markets respect these Fibonacci ratios, as I'm going to put on display for the 1,000th time, using the Fibonacci retracement from the swing low to the swing high. And again, what do you get? Boom, drum roll, rinse and repeat. A retracement down to the 618 golden ratio. And the other part that needs to go with it, oversold on RSI. No divergence yet because enough hasn't happened. Again, the same thing would have to happen as before, where there is conviction and accumulation, where the big institutional money is ready for another push. They already know that if this 618 retracement oversold condition holds and if the conviction is there, the next thing that they want to do is go back and get another taste of that 55, 5600. That's one. Okay, that's step one, is they want to get back there. That's kind of like the default next target. Okay, not targets and saying like these are your targets, but projection. This is just how the market works in terms of structure and ratio trading. Okay, 618 retracement, boom. But there's some other things that we want to bring into the mix. So you see me, sneakily dragging the price action back. You're very welcome, and thanks for joining. Thanks for staying locked in. I'm glad that these videos have been providing you a lot of value. I see that you've been rocking along. So what we're going to do this time, so the first one was based off of after the accumulation, we used that as a starting point, got a 618 with oversold condition. Now we're going to go do the real one. So after the actual real correction or distribution, that's actually the real starting point. But what we're going to do is tie them together using what you would call ratio confluence, overlapping over each other. So we're going to tie that together right now and see if it's one of the major ratios. And then we're going to finally tie this all together. So once again, with the Fibonacci retracement, swing low. This time it's actually a real swing low, okay, because it's after a retracement or correction. Coming all the way up, swing low to swing high, and we want to see what did we get. Okay, we want to see what's in that area on Only the 382 on that one, okay? Coming through it. So maybe if I go ahead and add one more, it'll be the 50. Okay, so now what you have is from the consolidation, from that correction, is 50%. You can't really see them because they're overlapping. That's why I said racial confluence, when two Fibonacci ratios are lining up with each other in the same place. So 61% from the consolidated area, swing low to swing high, overlapping and confluent 50% with the actual swing low to swing high here. Okay. The only other thing that I would bring into it using these different points is the final one back here. Now that's this correction right here. So I don't want to have to scrunch up too much, but you'll see me tie three together, giving me 3 layers of racial confluence. So one more time, Fibonacci retracement, okay? Swing low to swing high, and this time it's going to be the other one. So you're going to see me, the 382. Okay, so again, from the consolidation, it's 61%. From the most recent correction or distribution, it's 50%. From the actual real swing low after that distribution, it's 38%. So you got the 618, the 50, and the 382 all lined up on top of each other. That's why you're seeing the other conditions like the oversold conditions come in. Now, I did put a figure in the video, and I usually don't like to do that, but I'll go ahead and do it. This swing low to this swing high, these two right here, okay? I'm not concerned. Well, I'll probably come back and do it, but I'm not concerned with the little guy here, okay? I'm gonna start with the big guy first, okay? Right here, okay? So this swing low to this swing high, okay. I'll give you a little secret, and I do talk about this in our classes, especially the classes on Fibonacci and the A to B is equal to CD pattern. I'm actually turning this into kind of like a workshop teaching. When you get a 38% correction, okay, and the harmonic activity off of a 38% retracement equals a 1618 extension. Okay, so I'll go ahead and throw this in there since this is a short video. 38% retracement, 1618 extension. 50% retracement, 1414 extension. 618 retracement, 127 extension. Okay, so those are how those things go together, the retracements and the extensions. And again, all of that can be found in the class that I have. I have a couple of classes on just straight up mastering Fibonacci, but I just kind of gave you an explanation of it, and that also allowed me to tie the A to B is equal to CD logic in it. Now, in order for me to do this, I'm going to have to come off the 4-hour chart. I'm going to have to come a little bit wider for that. I'm going to have to come to the day, all right? And I'm going to have to come down small. See, I understand people are on phones and things like that, but I want you to see this here. Using a line tool, okay, and using A to B is equal to CD logic. A to B. Now remember, this is all predicated on if that structure that we think is structure holds and if there's accumulation there. If A to B is equal to C and D, and I clone the A and B leg and put it on C, which is where we are right now, and I go ahead and grab our extension tool and I measure to run the extension, swing low to swing high, and say I want the full max 1618. What do you know? Perfection. A to B is equal to C and D, perfectly confluent with the 1618 extension of the swing high to swing low, only when you get a 382 retracement. Okay? Now that's the full max aggressive thing. I'm pretty much done with that. Can you provide silver harmonics? So I can't do that because when I'm doing my FX lives, I'm trying to be interactive with you guys, but not that interactive where I'm jumping around and doing what you want to see me do. I'll give you a hint though. I will give you a hint, and I'll tell you that silver is basically doing the same thing that gold is doing, okay? Now, since I'm a nice guy, and since this is a short video featuring only one asset or one pair, I'll go ahead and throw silver in for you because I think that's the second time you asked me that, okay? Let's finish this one first, okay? So you guys see that as long as this holds, I had to jump to the day chart. Problem with it is day chart is nowhere near to being oversold. But I will say this, day chart is close to the 50. And a lot of times when I'll show you so that you guys don't think I'm just blowing smoke out of my ass. Sometimes there's reactions when there's decisions made at the 50%, the middle of RSI, and you can see that yourself. You saw a reaction here at the 50%. So see how many different tools that I'm using. Notice my chart is still clean. I ain't got a whole bunch of stuff all over the place either. I'm using my eyes and I'm using what the market is telling me. Okay, and then plus the way that I understand structure, Fibonacci, harmonic patterns, etc. But right here, to kind of calm the nerves, what I'm doing off of RSI is I'm using that as well. RSI is telling me that there's still strength inside of gold. And that if even if price comes down to reach the halfway point, which is the 50, so you got your 80 at the top, your high, overbought conditions, your 20 at the bottom, oversold conditions, and 50 in the middle. So that could hold because as you see, it has something to say. Slow down, come up, come break it. The 50 acting as support, basically. And you see it. It didn't this time, didn't this first one, but it did this time, and it did this time. These are just advanced things that I know and understand that I can deploy when I'm trading or performing my technical analysis. Probably things you've never seen anybody use the middle baseline and RSI to signal support. You can get that here at the Harmonic Trading Club. But now that we got that out the way, because I did have to address not being oversold on the daily chart where we are oversold on the 4-hour chart. I was going to do one more thing. So I'm going to come back to the 4-hour. We'll go ahead and get our guy his silver look. And I'm telling you, it's going to look just like this. But I don't want to just freestyle that one without having a clean look at it. I know I've peeked at it. But from that part where I did come up with our first retracement, the long one, the long daily A to B is equal to CD. That one, let me do this first. Let me just go ahead and grab the extension tool because I want to get these numbers in here. Swing low to swing high. Now remember, so this one was 618 retracement. That one was a 618. So this one, I'm only looking at the 127. So this is basically a 3-target setup, okay? The way this would look like for a trader, the retest of the 5600 would be TP1. The 127 extension of the consolidated low to high would be TP2. The 1618 full max off the day would be TP3. Notice TP3 is $6,600. So I'm not saying that gold is going to $6,600, but I am saying there is a technical case for it. So I remember when people were talking about 2,000, then they did 3,000. I think I did one at 2 and I did one at 3. We know I did one at 5,000 last week, and now here I am doing one at 6,600. Gold just never seems to stop. So that handles that. So that got the job done on that. Now, XAG silver. I told you silver was gonna look pretty much the same. So because I'm being a nice guy and he's asking us to do it, I'm gonna do it. It's gonna look the same way. So I'm looking at points in structure where I would start to make retracements. This is how I would break this down. So it's pretty much gonna be the same thing. See where you get this kind of like this retest in here, right? It's showing me something, right? And you can see the reaction off the retest, right? So I'll just go ahead and put a V in here. Hopefully you guys can see that, okay? So that little double bottom, right? That really happened. Structure solidified there, double bottom, okay? Double bottom followed by break and close beyond previous structure, taking all this stuff out, right? Taking out that V-neck. This is how you would perform this type of top-down technical analysis. Okay, double bottom, break and close beyond previous structure, expected distribution and correction. Okay, boom, wipeout. And now the decisions are being made. Nothing is solid yet. When I start talking about this the same way I talked about gold. When I say the decisions are still being made, I'm talking about when you look at the use case, when you look at the technical case, the decision hasn't been made as far as are they gonna go? Is there conviction there to go? The only thing we do know is like gold is hecka oversold. That's all we know. But we don't see the divergence. We don't see the accumulation. We don't even see a doji. This is more of a tombstone. But then you do see institutions trying to push silver. This isn't retail trying to push silver. This is institutions making that move. Okay? So that's all we have for our use case. Is just not a strong enough use case for me. I wouldn't want that doji to be perfect where it was like, we don't know. This is decision making time. And then we would want that third one to be the decision being made. Yes, we're going to break and close and we're going to go forward. We're going to break and close above the doji and go forward. But when you have a crazy wick like that, it's just a little bit hard to do. And a lot of times they fail, things consolidate and go sideways until a decision is made. Now, we forgot something while we're dealing with silver. Just see, now the title was all messed up because this is a gold and silver breakdown now. Okay, so retracement, right shoulder of that double bottom. Okay, when you're retracing, you don't need to go to the first part. You want to go to where the action took place at. The action didn't take place off the right. It took place off the left shoulder. Okay, so left shoulder swing low to swing high, and let's see what we got. Okay, we're going to bring on two big ones. We know this one is kind of deep. We think it's kind of deep, but it's actually not. Okay, it's perfect. Dip down and test into the 618, become oversold. Reaction start. At least it slows it down. Okay, you're seeing that with your eyes. I'm not making this up. Okay, now, good thing about it is breaching the 786 would have changed the whole story. Okay, like that's way too deep of a breach. This one stopped. It dipped into the golden ratio, came back out. Doji sort of like tombstone, and now looks like there could be some buying coming in. I don't know if it's strong enough to really do what it's been doing, but it's there. Now, the same way that I did on well, I want to run one from here too. I want to run one from this set right here too. And I think I am from this retest here. Just to see, just out of curiosity. Retracement, swing low to swing high, and looking at that, it's probably a 382. I'm going to take the rest off. Okay, so we don't have the type of overlap and racial confluence like we had on gold, but it's still in the zone. It's still close. It's still close. Okay, so dip into that. That's the structure that's created. It's just not, I can get rid of the 786. We don't need him. Okay, so that handles looking for the same type of racial confluence, and we would then do the same thing. I could draw two conclusions. I could draw it off the first, off the double bottom, high, 618, looking for the 127. That's going to give us a silver pricing. Swing low to swing high, come back, looking at the 127. So 131 for silver. It's a projection, okay? It's not a prediction, two different things, okay? And I can be wrong. This thing can completely collapse and just burn to hell, okay? Not always right. I'm right just as much as anyone else. All right, and then the aggressive way, looking at the previous double bottom that I probably should bring out onto the day chart. And since that one is more of a 382 or like a 50%, let me see if that's 50. It's actually 50. So on a 50% Fibonacci retracement, we're going to be looking at a 1414 extension from this low to this high. So we'll go get him. And this will finish the aggressive 1414 target for silver. So 143 is the aggressive. Now, The good thing I can tell you this is the institutions are usually looking for the hard push. I told you guys about silver when he was going to go get 5,200. That's what they wanted. There was some smaller stuff inside that the same way you saw me do here, the little least aggressive projection versus the very big one. The institutions on gold last week, they went straight after the 5,300. They weren't playing at all. So if I were to just finish this up with showing again the A to B is equal to C logic from the low here to the high and the 50%, and I said that it was a 1414 extension, right? If I go grab the line tool, because the market continues to create A to B is equal to CD patterns while it's trending, whether you like it, hate it, understand it or not, this is what that would look like. Swing low to swing high, or A to B, clone. If A to B is equal to C and D, you have an equal measure move. Take that leg and put it on C, and there you go. So a little bit higher because of the push past it, but in that zone. So the kill zone for gold, I'm sorry, silver, 143 to 146 in that range. So I can tell you that that's how they are going to be. The institutions are looking at 143. We just don't know when or how they're going to get there, but absolutely. Where they are now with the $99 to $43 more, that's really not a lot to them. It's good for gold. It's good for, silver. It's good for a silver investor, 143. He was also asking if there was anything we could do harmonically in here. The only thing we can do harmonically is the A to B is equal to CD pattern, which is a harmonic pattern. There isn't another harmonic pattern in here to go after. If it was, you guys know that I would have identified and I would have seen it. To prove that to you, I will just go and grab our XABCD tool. I'll come here, swing low to swing high. So we don't meet criteria to even get a valid B leg for, like, let's say bat. That's 42%. That don't qualify. It's either 50 or nothing. And then coming back up. Well, you don't want to see the other side of that, because then we start talking crab. And so I answer your question. From this leg to this high with 42% and then coming back up, your completion, your advanced pattern would be crab. But that would make silver have to go violate literally everything. Silver would have to crash for you to get crab. You guys are making me do too much. But of course, we kind of wanted to see more of like a bat or something like that, something that was going to allow us to like find structure and then trade up out of, not something. So crabs D-leg completion PRZ. And if you want to know more about the crab pattern, there is a class specifically on this pattern that only I teach on the planet, only me. And you got me doing it again here live. But to get that D-leg, that's inversion, extensions the other way from A to X. Who would have knew? Going the opposite direction, A to X, looking for the 127. Okay, so he asked, and I gave it to him. There's his crab pattern. You would need a 127 inversion of A to X. Boom, that's there. And that would give you crab. But again, if you want to know how to master the crab pattern, you got to go out to the Academy class, module 6, and there's a pattern. There is a class specifically on that pattern. But it's not there. It's not something we would be going after right now. What's on the rise here, the use case here, is the trend staying intact, being oversold, 4-hour day, and everything else that I talked about, gold and silver together. So I think that will do it for us. I hope that you guys like this one or found value in it. Send it to another trader that you know that this could help. Should have asked that you guys hit the like button, because of course you know you're not going to see technical analysis like this anywhere else on the internet, on YouTube, or on the planet except here at the Harmonic Trading Club. Subscribe to the channel if you're not subscribed. If you want to know anything about anything that I talked about as it pertains to structural analysis in this video, whether it was harmonic patterns, whether it was Fibonacci, whether it was how I deal with RSI, overbought, oversold conditions, A to B is equal to CD patterns, you name it. all in the Harmonic Trading Academy, the most amazing free academy on the planet, featuring almost 50 classes, probably worth a couple of $100,000, free on the house. My gift back to the community, anti-guru. All right, guys, keep it locked, stay tight. I love you all. Be good in the market. I will see you on